Hello traders, welcome to my YouTube channel once again. My name is André Cardoso. I hope you are fine. I hope you have a nice week trading the markets, and for those who are learning, I hope you have access to the most valuable and useful information available. So my objective here is to share with you some of the patterns the market tends to produce. Those who are familiar with my work already know I search for those advanced pattern formation, which allows me then to identify my limits and my reward zone for those patterns, which allows me also to engage the market and to adjust my position size accordingly to the time frame, the pattern that I'm trading, the targets that I have, so which allows me to identify the invalidation point for those patterns, so which allows me to survive and to get involved with the market, knowing that I will be here tomorrow also. So that is also important, to be here today without compromising the day of tomorrow. And to do that, we need to be disciplined, we need to apply a decent strategy to our trading journey, and sometimes that will not be possible because we deal as human beings, we deal with emotional reactions, and the only way that we can fight those emotional reactions is with a very oiled strategy already created and developed and already reinforced multiple times. So that being said, it will take time for us to develop and to create and to get established inside the market. My effort is to try to use the information that I have at my disposal and my experience, and to try to share that experience with those who are trying to get involved with the market for the first time. And I hope my information is useful, at least for some of you, which allows you to help you during that process to create and to develop your own trading strategy. So aside this introduction, let's move forward into some of the patterns that I want to show you, starting with the DXY on a 4 hours time frame chart. I shared this price action pattern before. We are trading 91.35, so those who are following me on Twitter already know this is the bullish cipher pattern territory. This is a bullish cipher pattern for a weekly time frame. Actually, this is a major, or let's call this a higher degree bullish cipher pattern completion point, 91.41. So this was projected before a few months ago. I projected the possibility to find some pressure zone at this level, 78.6, and on a lower time frame I shared also this as a bullish crab pattern converging with that price zone. So I will not be surprised to see a major bounce from this zone, but taking this bullish crab pattern into consideration, I will target the 38% Fibonacci retracement as a first target, and then 93.08 as a second target positioned above. Step by step, there's a lot of things that needs to happen before the price achieves those levels. First of all, the recovery of the weekly fractal support printed September, the first day of September actually, and then 2020 obviously, and then we need to recover that fractal, and then we need to recover also the daily fractal position, the fractal support from November. So basically we have these bullish crab patterns suggesting a bounce from this price zone, and as we can see, we are also trading the previous structure highs, the most recent previous structural lows, acting as a potential pressure and resistance at this point. So let's see how the price will react from here, but the expectation is to see to see the DXY trying to push or to try to retest these previous structure support levels. That should be synced with downside momentum for euro versus dollar. Let me correct this. I was trying to show this price behavior before. So basically I projected this as a bearish shark pattern at 224% Fibonacci extension level. I call your attention to this previous ascending trend line, support line, recovered and retested multiple times, and as soon as the price decides to recover again above this trend line support, it has created this strong bullish momentum. So but basically we have this initial, let's call this an initial upside and trend line support, or this parallel channel there, and I was expecting, let's say, or a violation below and keep trading lower, or a bounce from this price structure. We have a violation of this ascending channel, then we have kind of a retest of this high, so retest of this previous trend line support, acting as a resistance, new lows, weekly fractal, and then finally the price recovering that trend line. And as we can see, multiple times the price respecting that trend line support, and when finally the price recovers, it has created nice bounces above that trend line. So basically we are now trading above the completion point of the bearish shark pattern projected before at 119.78, above the weekly fractal previous structure highs, but also above this kind of, let's call this the trend line resistance of this channel. So if the price decides, very similar to what happens before with this trend line support, if the market decides to recover this trend line resistance, I will assume the price will need to fall. So we have already adjusted these Fibonacci retracement levels. If the price needs to search for the let's say the minimum 38% fib, that may put the price retesting again that daily fractal resistance again. So 118.93, basically this is a 38% fib. The default target for the shark pattern, usually the 50% fib, but note that we are not trading the shark pattern anymore. I will not ignore the price can actually fall from these highs, but nothing assures me that will happen. Actually, we need, first of all, we need the recovery of this weekly and monthly fractal resistance. So if the price decides to recover below 120.11, that may trigger more downside momentum. But at this point, and because the market has felt some pressure at 224% fib, but it has failed the deeper retracement to the default target. So basically, if the price decides to fail that shark pattern, I will then ignore what's coming next. I need to try to identify the next pattern above this structure. At this point, I will, as I said, I will not ignore the recovery of the weekly and monthly fractal may trigger downside momentum, but at this point I need to wait for something to happen. One of the things that I will try to identify is something like the recovery of this trend of this resistance, the weekly fractal resistance and the monthly fractal, the reinforcement of this previous structure support level, the most recent one, as a potential next zone. And then if the price decides to print me kind of an edge and shoulders here, I will try to maximize my profits if the price decides to fall below this fractal support. But for that to happen, we need to see all that happen. I need to see a price falling, recovering this trend line support, recovering the weekly and monthly fractal, and just that may offer downside momentum. We can try to identify a flag or a triangle there to try to engage the market, or even whatever the price will print you. If the price decides to approach this resistance and turn into a support, so if the price decides to print kind of a, I don't know, kind of a flag here, or even a wedge, whatever the price prints you at this at this resistance, we can try to take advantage of this structure and try to take a short below this flag formation there. But let's wait and see. But again, at this point, I prefer to wait for a confirmed and clear event. In the example that I was using as an example, just as an example, and pure speculation, an head and shoulders will call my attention for shorts for euro versus dollar. Moving forward, Australian dollar versus dollar, Aussie also trading a bearish shark pattern completion point, a few points above. This was one of the examples that I shared, using an example of a 1-2 risk reward. So $1 at risk, $2 as a reward. So this was just one of the examples, always trying to respect the previous structure highs. So that makes a 95 points risk for 166 points reward, adjusted already to the most recent high. So that reward is not the initial reward measured from the completion point. So we need to measure the initial reward, the 50% fee, which was projected a few points below 186. So 186 points as initial reward. Then the price printed new highs above our entries, so we need to adjust those targets, which I need to adjust into 166 points below my entry. So it makes a friendly situation, even if I need to adjust my targets a little bit. As you can see, a 1-2 risk reward approach using for the shark pattern. I believe it's more than enough to see the price, to see the pattern working. So that being said, I'm still waiting for 71.99 for the dollar, Australian dollar versus dollar, the Kiwi, the Aussie. I'm sorry, the Kiwi. Now, also projected, all of them, with the exception of Australian dollar, but euro versus dollar, specifically euro versus dollar, and the Kiwi being pushed quite above the completion point of those patterns. This was an example for the crab pattern at 168 extension 69.74. So I was expecting a reaction from here. Let's measure the initial reward for this trade. So basically, let me delete those levels here. So we have the entry point for the pattern. This is the crab pattern. So basically we search for the 38% Fibonacci retracement as our initial and first target. But then the market, and let's measure these. So let's call 180, just to simplify our math here. Let's call these 180, so let's make these 90 points as a 1-2 risk reward approach. And as we can see at this point, the market has reached using a 1-to-1 risk reward approach, the market has reached our stops. Okay, so that being said, using one of the most frequent examples that I tend to use, a 1-2 risk reward approach, at this point the bearish crab pattern failing for the Kiwi, which does not invalidate the possibility for downside momentum. As you can see, we have this ascending trend line support at this point under pressure. We can see the price already threatening the violation of that trend line support. That may offer downside momentum for the Kiwi. I will not ignore that. But as you can see, using this example, at this point the market has found resistance few points above the example for the Kiwi as a 1-2 risk reward approach. As I always say, we never enter the market to lose more than what we expect to win. So basically never more than a 1-to-1 risk-reward approach. So if you want to use a 1-to-1 risk-reward approach, 177, so this is the example used for a maximum of 1-to-1 risk-reward approach. Okay. So that being said, I will not be surprised to see the Kiwi if below the most recent fractal support. I will not be surprised to see the price falling again. And let's adjust these trend line, these Fibonacci retracement level. I will not be surprised to see the price trading these 38% Fib. Let's point that at 68.66. We have also the 200 moving average at this point pointing at 68.05, so I will not be surprised to see Kiwi needs to fall at some point. It needs to relieve from this bullish momentum, and I believe the market is very close to that pressure zone. So I'm not sure. Obviously, no one is that is not granted. No one knows what comes next, but I believe we are now facing a possible retracement for the Kiwi. Australian dollar, that will depend also. That may be synced with the Kiwi and the Australian dollar, specifically the Aussie. Let's see how the market will react, but ultimately we may see more downside momentum, and if that happens, I will wait for the cipher pattern at 102.18. So that basically will print a bullish cipher pattern right there, and that usually will suggest a bounce towards the 38% Fibonacci retracement. So that means that as soon as the price abandons this zone, and if the price forms that bullish cipher, I believe the price will retest this price zone again at some point, and in a form of a bullish cipher pattern. That's the pattern that I wait for Australian dollar versus the New Zealand to form below. Now, dollar versus CHF, I also projected this as a potential bullish bat pattern at 88% Fib. Actually, the price was approaching the 78.6 when I projected this bullish bat pattern as a potential pressure zone at 88.6. The price has found support at 78.6, in that it has already reacted very well from that Fibonacci retracement level. 38% Fibonacci retracement reached, so the market has already retraced to the 38% Fibonacci from all these swing lows. So all this bearish momentum, the price has already retraced to the very first Fibonacci level, and as you can see, we are already trading the weekly fractal support. So basically a violation of this structure may put the price trading even lower. So the next level that I will search for pressure is right below the weekly fractal as a false breakout below the weekly fractal, 113% Fibonacci, and eventually recover from these structural lows, or these lows, this Fibonacci extension level. And if the price fails to find support inside this range between where we are at this point, where we are now, and the 113% Fib. So if the price fails to find support inside this range, we may see the price sinking even harder, even forward into the 168 extension. So basically I will search for kind of 88.53. So if the price fails support close to these monthly and weekly fractals, we may see the CHF trading even lower. If that happens, we may see euro versus dollar trading higher, since it trades related and inverted with dollar versus CHF, or they tend to search for kind of a relationship, inverted relationship. So BAT pattern, of course, well, that's what we are seeing here, the BAT pattern at 88.6, alt BAT pattern at 113% Fibonacci extension as a limit for a bounce, one of them rejecting the previous structural lows and the other one acting as a false breakout below, so false breakout below in the bounce. And if that happens, if that fails, actually we may see an extended crab pattern being pushed below. Dollar versus the Canadian dollar, the CAD also with the bullish BAT pattern projected before at 88.6, nice bounce, but not before threatening the previous structural low. So we have the price there forming the pattern, push it below the previous structural lows, and then a fast bounce. But again, we still threatening that weekly fractal. The idea is to see a bounce, a significant bounce from this weekly fractal using that pattern, the bullish BAT pattern at 88.6. Always take into consideration the alt BAT pattern, because it's usually if there's hunters trying to hunt your stops positioned right below, they will use these situations to hunt the stops positioned right below those lows. So basically we need to, I always suggest when trading the BAT pattern at 88.6, always take into consideration the 113% Fibonacci extension, because that allows you to protect your trade from potential hunters trying to stop those limits positioned right there. So basically I will not be surprised to see a bounce from this price zone. If the price decides to fail a bounce from this price zone, as I said before, we may see more dollar weakness versus the Canadian dollar, which may put the price trading even lower. If that happens, we may see the price trading 27.77. So basically the 168 extension, bullish crab pattern extended below. For now, we're still trading inside this first range for the BAT and the alt BAT pattern completion point between those two levels. And well, let's see how it will happen. And as you can hear, it has started the Forex Analytics daily webinar with Blake Morrow, Dale Pinkert, and all the team at Forex Analytics. I'm not sure who will be there today, but it's always nice to join the FACE webinar from Forex Analytics, which I invite you to join. Now let's try to finish this faster. From here, Norwegian krone, bullish crab pattern printed, 168 extension projected at 82.67. Let's see how the market will react from here. We have a nice structure already being printed here, kind of a megaphone formation. Let's see how the market will react from this price zone. We have a bullish, major bullish pattern also projected before right there. So in the minor or an internal bullish crab pattern also projected at 82. The same thing that I will wait for. The retracement or a bounce towards the 38% Fibonacci retracement level. Let's see how the Norwegian krone will react. Mexican peso, another one on a higher time frame, 4 hours time frame chart, 78.6. I projected these as daily time frame, daily bullish BAT pattern completion point at 88.6, just a few points below the most recent lows. As you can see, the 78.6 acting as a potential support or a pressure support element there. Let's see if the price will react from here. I was saying I will not be surprised to see the reinforcement of this trend line or descending trend line at some point. If that will happen now, I don't know what we have at this point. It's on a very lower time frame. I was expecting as soon as the price starts to break these previous lows here, I started to project patterns above, but then the market starts to fall again. So this makes this a consolidation or a sideways moving process that usually I don't want to get involved with. So that being said, we still trading the 78.6 price zone, major Fibonacci retracement level. I will not be surprised to see a bounce from these lows, but eventually limited to the previous structure support level and the most recent daily fractal already printed there. So I will not be surprised to see, let's say, or more sideways, or eventually a retest of these fractals over here. The major pattern that I projected was the bullish pattern, and we are far from that completion point. Actually, I believe it was printed like this. So that being said, 88.6, 1935, let's see if the price at some point will reach those levels. If that happens, we'll start to pay attention to the Mexican peso. Dollar versus the yen, I also projected these on a lower time frame as potential alt bat patterns between 105.44 and 105.94. So there's a small range, as I said before, between the bat and the alt bat pattern. The alt bat pattern acting as a false breakout above the weekly fractal. Let's see how the market will react as soon as we approach and if we approach these completion points. And if it fails 106.93, we may see the price trading even higher if the price decides to ignore these Fibonacci levels for the BAT and the alt BAT pattern above. Euro versus the yen, I shared the potential violation of this channel, this descending channel there, as a potential right shoulder formation. So basically what I'm expecting to see, obviously bearish crab pattern projected here at red, a minor bearish crab pattern completely ignored, as you can see, 125.42. This was a minor crab pattern projected above the daily fractal, completely ignored, as you can see. And we are also approaching the trend line resistance, or one eventual trend line resistance for the ascending channel. So basically we are approaching this symmetrical projection that I shared before among our communities. We are approaching also this symmetry. We have above the monthly fractal, the golden Fibonacci extension level. This will be an important price level to retest. Let's see how the price will react as soon as we approach that monthly fractal. But we have also a few points above 127.60. We have the 200% Fibonacci extension level, which is nothing more than the default projection for these heads and shoulders, for these inverted heads and shoulders. Okay, so I will not be surprised to see that happens, converging with the completion of this major bearish shark pattern at 168 extension. So let's see what will happen. Pound versus the yen, I shared this as a potential cup and handle and as an eventual bullish bat pattern at 88.6 as soon as the price starts to fall. Obviously we need to wait for a violation of this previous support in order to start to project this pattern, but at that time, the time that I shared this pattern, we have this kind of a cup already formed, the handle, and we were trading below that 200 moving average. So at some point I started to expect, okay, if the price decides to fall and violate these daily supports, and using these as a potential technical double bottom above at some point right here, using these as a potential technical double bottom or technical double top, I started to project patterns below, because if that double top triggers below the next zone, below 138.27, we may see the price trading 136.69, which is the default target for the double top, and that will open the door to form then later the bullish pattern below. But what happens next is a violation of this double bottom or double top, with the price rejecting to respect these highs, printing new highs already, threatening the weekly fractal, and now it has started to push to be pushed back again. So let's see how the price will react. Ultimately, bearish bat pattern on hold above at 141.62, and also the default projection for the cup and handle projected at 200% Fibonacci extension. So basically it's the 142.35. Let me delete this because I don't need this anymore. So the same way the pattern never triggers, it has been invalidated before even being triggered. So it makes no sense to wait for it. This bearish pattern still, it's still possible. So we have new highs above the previous structure highs, but we have closes below the previous structure highs. So we have the previous structure highs there, and we have the price is closing below those highs. So the bearish, actually the bullish pattern remains as a possibility, of course, but at this point we still need a lot of bearish momentum before even thinking on that pattern formation from here. So for now, let's ignore that possibility, and let's stay focused on this potential bearish pattern above, with the default target for the cup and handle projected at 142, and also suggesting a visit to the monthly fractal. And obviously I believe this will make sense, at least for some of you, if the price decides to trade that monthly fractal again. We may see the formation of a mega, not so mega, because actually this is only a 1 hour time frame chart, but that we can see this on as a potential cup formation on a higher degree. Australian dollar versus the yen. I shared this yesterday. We still threatening that weekly fractal. I projected patterns above between the shark patterns projected between the 161.77.63 and the 224 at 78.49, converging with this major bearish shark pattern completion point right above the monthly fractal also. So let's stay tuned for the Australian dollar versus the yen. Let me drink something and let's move forward. New Zealand versus the yen also completed the bearish crab pattern at 168 extension. Actually that pattern was completely a few moments ago. I shared this among our community. Well, actually the market has nailed the pattern completion point, 74.04. At least that was 74.04, 74.03. So this is the most recent highs for the New Zealand versus the yen. So basically this completes the bearish crab pattern. So we can wait for at least the 38% Fibonacci retracement as a default target. For the pattern for New Zealand versus the Kiwi. And what else to say? Nothing more. Using this as another example, as a reward, 170 points as a reward. That's what we'll offer you. CAD versus the yen. Also approaching the 168 extension and the bearish shark pattern completion point, just a few points above the most recent highs, 81.02, 81.01. So that's the bearish shark pattern. We can expect a retracement back to the 50% fib, which may put the price trading back to the 80.12, 50% Fibonacci retracement. This is also kind of, let's measure this. It looks like, I'm not sure, but it looks like a symmetrical, not quite there, but almost a symmetrical price behavior. So let's not be surprised to see that fall from this CAD versus the yen bearish shark pattern territory. Euro versus cable, euro versus the pound, I'm sorry. 12 hours time frame. I shared these. Look at that symmetry. That's why I like to plot those symmetries. This one on Canadian versus the yen, dollar versus CAD, also with a symmetrical projection, and I think there was also another one, dollar versus CHF, symmetrical projection followed by a nice reaction. Actually, I'm not sure if the Canadian was symmetrical. No, it wasn't. CHF, it was one. Norwegian krone, Mexican peso, euro versus the pound. Nice symmetry there. Technical double bottom triggered. We are also trading above the daily fractal resistance. Use it kind of a next zone. Use it as a next zone kind of for the technical double bottom. Triggering the pattern, we have projections already positioned or projected at 91, or targets already projected at 91.26 for that technical double bottom, and without ignoring obviously the bullish pattern completion point, which was reinforced by this technical double bottom. So at this point I was expecting another bounce to the 38% fib, and we have also the golden Fibonacci retracement there as kind of a confluence and the second target for the bullish pattern, but the second target at confluence with the default target for the technical double bottom forged below. Euro versus the Australian dollar, a few points actually far from the projected bearish shark pattern or the crab pattern. This is also the first shark pattern territory, or the first shark pattern completion point, the 168 extension. We can use these, let me just push this here. So this is a major bearish cipher pattern completion point, and this internal bearish crab pattern there. So basically I will wait for that pattern to be completed. If that happens, we will wait for the 38% Fibonacci retracement. Very limited shorts here at this point, just for a few hundred points. So that's what I expect. If the price decides to print that pattern, that will put the price trading the previous structural lows, also very synced with these structural lows over there. So basically, and if we want to see this as a kind of next zone, so for these heads and shoulders, kind of an heads and shoulders, we can use this as a kind of a support next zone, retested at 168 extension, so in a form of a bearish crab pattern right here. So if that happens, I will not be surprised to see a reaction. This is also the 50% Fibonacci retracement, so converging with that retracement level also. So I will pay attention to that shark pattern at 1/600 extension, without ignoring obviously the potential for more upside momentum and the formation of that shark pattern also at 224% Fibonacci extension level. So Euro versus the New Zealand, also one of the pairs trading the 224% Fibonacci extension as a bullish shark pattern completion point is blue one. Nice consolidation here, and we are and nice bounce from this price zone. Let's see if it will be enough to put the price trading the default 50% Fibonacci 74.84. So let's see if the market will target that price zone. Also monthly fractal support, so let's see if the price recovers that price zone or that fractal support. Recovering above that fractal will increase even more the probabilities for more upside momentum. We have also the weekly fractal support very close to the default targets for the pattern. But again, I will not ignore a fall below the daily support, which will invalidate that pattern above, and a fall below that fractal may force more downside momentum, which will force me also to pay attention to this price zone if that happens. Now this is the pound versus the Australian dollar, and I shared these actually this morning, I believe, saying this. Well, this is kind of this is one of those charts that we really need to wait for something to happen. So I can see a lot of things here, but I saw the potential for these heads and shoulders to happen, and that's one of the reasons why I shared it, obviously. But we are trading inside this, we are moving sideways inside this range between the weekly fractal and the daily fractal resistance right there. So we need to wait for the market actually to decide what to do. So we have one event that may create some interest for some traders, which is a retest of this daily fractal, actually one approach to these previous structural lows, that may offer some pressure, which may offer some bounce from this price zone, and well, we have kind of a bullish shark pattern to 1/608 extension right below the daily fractal, right above actually the daily fractal, the most recent one. We have the weekly fractal below, but 180.24, so this is a bullish shark pattern territory. Oops, what I've done here. Okay, bullish shark pattern between the 161 obviously and the 224% Fibonacci extension, actually converging with the weekly fractal. So basically I will not be so surprised if the market decides to reinforce these lows again and a bounce from this price zone. But if the price decides to break below this weekly fractal, then I will keep monitoring these or following the possibility to form this extended crab below. I will wait for the 1/608 extension. This is the 1/608 extension of these most recent highs. Okay, so this swing projected below, and that being said, that will complete the crab pattern regardless of all these sideways moving process. If the price decides to fall into these lows, that will complete. And let's say we have one first swing low and one very long sideways moving process, and then I will wait for downside below. Okay, so we have a first swing low, consolidation, and new structural lows below. Let's wait and see. So that being said, we have these patterns, these bullish shark patterns projected at the daily fractal and at the weekly fractal. And if the market fails support there, we may see the price trading even lower. And if that happens, 176.17, this is the bullish crab pattern projected below. Obviously, all that can fail, and note that a violation of the weekly fractal will confirm this as a potential heads and shoulders, which may put the price trading the default targets 177.33. But all that can fail, and the recovery of the daily fractal above, actually trading above the daily fractal, will open, or let's say will increase the probability of a retest of these fractals, the weekly and monthly fractal, and of course, taking into consideration the ratios presented below, I can project this crab above. And if that happens, we may see more upside momentum, and above the weekly and the monthly fractal, we have this extended crab pattern projected above. It's the same crab pattern as the one extended below, using the same criteria, the same ratios, but this one projected above structure, and the one and this one projected below. So, and to finish, pound versus the New Zealand, I projected this as a bullish shark pattern at 168 extension, but again, as you can see, we are now trading right in the middle between the 224 and 161. So those are the bullish shark pattern territory. This is the bullish shark pattern territory, and those are the two levels that I use to plot those completion points. One of them at 161, and then the one at 224% Fibonacci extension. It's not the first time, as I used to say. It's not the first time you will see a reaction from the 161, then the price will bounce from there, and then the price will fall again into the 224% Fibonacci extension, offering a second bounce from that Fibonacci level. We have already a few examples where the price respected both of those Fibonacci levels, creating some interesting moves from there. So as we can see, we're still trading inside this range. I will not be surprised to see at some point cable versus the New Zealand to react, specifically if the Kiwi starts to fall, which may open a window for the British pound to gain some strength against the New Zealand. So, and finishing with the dollar, the gold also actually, and silver, as I shared before, the bullish shark pattern, that's correct, the bullish shark pattern projected before at 1794, as we can see, also trading in the middle of actually finding support right in the middle of these bullish shark patterns price zones, or bullish shark patterns completion points. 50% of this range right there, and the market finding support a few points above at 1764. So at this point, I still expecting some reaction towards the 50% Fibonacci retracement level. So that is the default target for the shark pattern. So let's assume the market will try to search for those levels. Very similar with the silver, more aggressive than gold. I'm sorry, it has formed bullish alt-bat pattern at 113% Fibonacci extension level. As soon as the price starts to react from this Fibonacci extension, I noticed that the price has printed the bullish bat pattern, So at some point I expected that reaction. We are already trading above the first target and close, very close to the second target for the pattern, which is the golden Fibonacci retracement level, the 60 on 8 retracement level. So, and that completes the sequence here. Let me just share with you my last projections for crude, and the ones that I need to push my fibs here. I was expecting kind of an extension of this previous structure, this swing low projected at 1/6 extension. So it's still possible to form. I will not ignore that possibility. So we're still trading in a zone where I will not be surprised to see the crude oil searching for new highs just to print a pattern. I projected the pattern of 46.60. 46.60, it was my initial projection. So this is the bullish, this is the bearish, this is the bearish crab pattern, kind of similar like this. If formed, we will expect something like a retracement. So even if limited to the 38% Fibonacci retracement level, that may offer a nice fall. Let's see if that happens. So if the price forms a pattern above, we may see a fall then into 41.61. So this is the default 38% Fibonacci for the crab pattern. So let's wait for crude oil to see if that will happen or not. Now, and to finish with the German DAX, which still trading inside these. I don't even know what to call it, but it looks like an ascending wedge. Let's see if the market will actually decide what to do above or below. So I still shorting these. I shared these charts before and saying, okay, I'm shorting DAX and I'm out above the monthly fractal, and I keep I will keep that in mind. As soon as the price violates this monthly fractal above 1346, I will jump out from the DAX. Until there, I will keep my shorts, and I eventually and I will keep my targets accordingly to my expectations. Basically, I have my first targets at the very first Fibonacci level, at the 23% Fibonacci retracement level, 1294, 1263, and then 1238. So let's see how the market will react from there. But of course, trading above that monthly fractal may put the price trading quite above, with default projections for these inverted edge and shoulders pointing the 200% Fibonacci level right there. So let's see how it will happen, how it will develop from here. More what to say, and this finishes my introduction here with S&P. Actually, let me try to share with you also the pattern that I shared among our communities. So, and basically we have this kind of three-wave structure here, or these first three swings, and I projected also the 1/6 extension. I will search for the completion of that crab pattern also for the DAX, for the SPX 500, if that happens. So if the price decides to trade around those levels, that would 37.76. So this will be the the bearish crab pattern completion point. So let's see how it will develop. I still I remain with my shorts for the DAX. Let's see if that will confirms. Obviously, I believe both SPX and the DAX tends to follow each other. So basically, the DAX will follow the SPX price action, usually in terms of momentum. Let's see if that will happen. If the DAX will fall, obviously the SPX should fall also. Let's see what will happen from here. So I hope you enjoy my video, and I hope you take some useful information for your trading strategy, and specifically for those who are starting to learn and starting to create their own strategies to get involved with the market. And well, it's always a pleasure for me to share my insights, and it's always a pleasure also to check your to see your comments and to see your reactions to my work. It's always interesting. So that being said, I wish you all a nice or the rest of trading week, and all the best for you and for your families, and stay disciplined, and see you next time.